it's great to see you again. This session, I'm going to be talking about tax tips and why you can't afford to not be a homeowner. I'm encouraging you renters out there to try to jump on the homeownership bandwagon. So this time of year, we've got the dreaded April 15th coming up, and if you haven't filed your taxes, I'm here to give you a few extra tips on what you should be filing, how you should be filing, and some deductions that you should be made aware of. First of all, when you're filing your taxes as a homeowner, you need to file an itemized return. You can't do your 1040 easy anymore. You got to actually itemize your deductions. The other part to it is if you're married, you need to file jointly. You can't file single. If you're filing single, you can't take advantage of many of the deductions I'm going to be speaking about in a minute here. First one, the most major deduction, is mortgage interest. When I receive my payment or my statement every month in the mail, I hate looking at how much interest I'm paying. But at the same time, I know at least it is tax deductible. Because when I'm done with that mortgage, you no longer get that deduction. So though we pay a large amount, you're going to get the most money back on that deduction itself, your mortgage interest. The next thing is did you just buy your home this year, or did you refinance this year? I know a lot of people did. If you purchased points to get your interest rate down, those points are actually tax deductible. If you just bought your home this year, it's tax deductible this year and this year only. If you refied your home, it's most likely deductible over the course of the loan. So though it's a small amount each year, take advantage of it. Don't let the government keep your money. Next thing is, and this is my favorite, because whether you owe a dime on your house or not, the property taxes you pay are deductible. So property taxes, make sure you're deducting them from your taxes. Some people, it's included in their escrow account, so you pay it monthly with your mortgage and you don't even notice that you're paying it. Other people pay it in chunks throughout the year. Either way, make sure you're getting a statement and you are deducting those. Next item, and I like this one as well, is a home office deduction. Even if you don't work from home 100% of the time or even 50% of the time, if you have an area specified within your home that is an office and it's dedicated toward work, whether you're self-employed or employed by someone else, you can get some deduction from it. The Small Business Administration estimates that the average deduction is about $3,686 per person. You multiply that by your tax bracket, and that's an added deduction for you. That's the money back for you. So don't forget about that one. Mention it to your accountant. Make sure that they're deducting for your home office. Finally, something that's special to 2010 and it's being taken off for 2011 is energy efficiency. Did you buy a new fridge, dishwasher, washer and dryer? Those items, if they are Energy Star rated, are all tax deductible. Other items to be aware of are taxless water heaters, or tankless water heaters. Not only are they excellent for your home, but they are a huge deduction. And something else, something that we actually used on our taxes this year, is an EPA rated wood burning stove. We're out rural, we got the wood burning stove, and now we get a tax deduction for it. Fantastic. Now there are a couple items that you can't deduct, and a lot of people mistakenly think you can. First one is your private mortgage insurance. If you weren't able to put 20% or more down on your home, they probably required you to have what's called private mortgage insurance, or PMI. It's not tax deductible, so don't include that. Next thing is property hazard insurance. Though every home in almost every state is required to have hazard insurance, it's not deductible either. HOAs, or homeowner association dues, not deductible. You're privileged to live in a neighborhood that has HOAs, and I guess they don't feel it's worth it for them to deduct it from your taxes. And finally, this one is something that a lot of people don't realize, but doing repairs and doing remodels to your home is not tax deductible either. So don't include those on there. You don't want to get audited later. I hope all this information helps. If you have any other questions, or if you know someone who's looking to buy because they no longer want to pay those high rental fees and they'd like to get these tax deductions, give me a call or shoot me an email and I'd be glad to help. Thanks so much. Talk to you soon.